help getting out of debt. Call me at 877-753-CNBC or email me at carmen@cnbc.com and you could be on the show. Decisions. It is time to solve your dollar dilemmas. Let's start with Rick in Texas, who comes to us via Times Square. Rick, what's your dollar dilemma?
Carmen, I'm from Sugar Land, Texas, and I'm looking to increase my percentage of investments in foreign stock mutual funds, and I'm just wondering what funds you'd recommend or particular stocks that would be the best for me for the next 1 to 3 years.
1 to 3 years. Rick, well, first of all, 1 to 3 years, shame, you should be watching our buddies over there at Mad Money and Fast Money, because over here at On the Money OTM, we don't want your money touching individual stocks, especially, or any sector, if it's not in there for at least 5 years. But let's talk about specifically Doug Flynn, about where he's looking to put this money, this sector.
Right. Well, foreign stock, when looking at the allocation that we got, it's already very heavy international, and you can make the argument that that might outperform the U.S., but I just think that when you already have too much, you can have too much of a good thing. And the way we read this was financial funds. So we were talking about a sector that is international bank stocks. So when you're drilling down to that minute of a sector, I think you're parsing it too thin. It's just, you know, foreign banks, I don't know.
International financials, I don't know. It's just, it doesn't sound yummy to me.
I love international investing, but the one thing you have to be aware of here at your age, Rick, you have a lot of risk. Besides the regular market risk of these stocks going up and down, you have to have currency risk as well as you convert it back to America, which right now might work in your favor, but I would cap your international exposure at your age to 15%, have a little bit in emerging markets, the rest in a well-diversified international fund to bring you up to the 15%.
Yeah, I mean, I love international. I always have internationals in my portfolio. However, they're not just one particular sector. You can't do that. That's a little too much stock picking there, Rick. But thank you so much, my friend. Hope you take our advice. Michelle in Florida. Michelle, what's your dollar D?
Hey, we've recently closed my husband's business and have spent the last 60 days really streamlining our budget and counting every penny. We have a 5-year goal, and we want to be very intentional with our money, and I'm wondering what's the best mix of savings and debt reduction?
Okay, so where are you at right now, though, in terms of how much do you have saved up and how much debt have you got?
We have very little debt. There's $5,000 of small business debt at 0% that we think we'll be able to take care of before that 0% expires.
Right.
We have no personal credit card debt. We have one car loan, a HELOC, and a mortgage.
Okay, don't worry about those other three. Let's talk about what your savings are like, Michelle.
Okay. We have about $140,000 in various retirement accounts and some money for the kids, and about $3,000, $4,000 in liquid savings.
Okay, so you're kind of short there on the liquid savings. That's what's popping out to me, Doug Lockwood.
Yeah, same thing. I mean, you're trying to accomplish a lot of things here, Michelle, all at one time, and sometimes it could be paralysis by analysis. I would love to see you focus on getting your liquidity fund taken care of first. Once you get that done, you can work to start to pay down this HELOC and then move on to stuffing the college funds and the rest of your retirement plan. But, you know, I think at this point, the liquidity fund is critically important to get set up.
Yeah, Michelle, it's really critical right now. The best way when you're talking about, I don't know where to put my money, there's so many things going on here, is what is urgent right now. What's urgent is you have some cash savings to go to in case of emergency, especially as small business owners. That's what really gets to me.
Yeah, and be careful. A lot of people are considering cutting back their 401k contributions to try to do these other things or pay off debt or build up additional savings. And I always say, look, if you cut back your contribution to your retirement plan by $300, you're only going to see about $200 of it. So it doesn't go as far. And the difference is because you're now not saving that money in taxes. So that doesn't always go as far as you might think. I would focus, agreed, towards the savings. That is woefully inadequate for your situation, given what your income and your assets are.
Yeah, and Michelle, go to dinkytown.net and do some calculations there in terms of how long it'll take you to save up at least 6 months. A small business owner, I would love to see a year's worth of cash savings in there to protect you guys and then work on your other debts. Thank you so much, Michelle. Lisa in Colorado. Lisa, what's your dollar D?
For the past 10 years, we've been maxing out our 401k contributions. The problem is I had them all in stocks, so of course I've lost about 50%. I was wondering if I should continue to invest in the stocks still, or should I start putting into savings accounts or something different?
Yeah, Lisa, that's the thing. When you have everything in the market goes down 50+%. Everything, your whole thing goes down with it. But Lisa, the answer may not be going someplace else. Doug Flynn.
Well, if you lost that much and that made you uncomfortable, the first thing that pops into my head is you need to get a clear understanding of what risk level you can take and probably work within the 401k to adjust to a portfolio that you're comfortable with. That takes away the need to feel like you need to do something entirely different. It isn't that the 401k treated you badly and therefore it must be punished. It's just that you need to look in and make sure you have a comfortable risk level and continue to add, because the tax savings and the benefit long term is fantastic by doing
Absolutely, Lisa. And if you want to put some money into a Roth, just make sure that that's all about diversifying your tax strategy and where your investments are going. And I always say, Lisa, at your age especially, put at least 20% in cash, please, just for me. Thank you. Thank you, Lisa. Got a dollar D you just can't crack? Tell us about it through Facebook. Join our official page. Just head to otm.cnbc.com to sign up. I can't wait to hear from you. I'll be in there. Much more in a moment. Next, with those new credit card rules set to become law, what will the new credit card world look like? We peek into the future. And later, our financial advisors give us the one place you should put your money right now. It's the OTM Pick of the Day.